Good morning. This is Larry McMillan with a stock market update on Monday, June 27th, before the market opens. So it looks like an oversold rally is underway. The market bottomed out really a week ago, Friday, and basically rallied most of last week. It's had a pretty strong rally already, but it looks like it could go a little further based on a couple of other buy signals that we've had. As far as the S&P chart goes, the long-term picture has not changed, though we're still operating under a bear market scenario with lower highs and lower lows. But we did gap up from the lows now most recently, and we got a Macmillan volatility band buy signal. That has a target of the upper bands. Right now, those are around 42.50. So I don't really know if it can carry that far this quickly. Sometimes it takes a while to reach that upper band, and it, of course, can move. But on the shorter term, there's a gap on the chart that would be filled up with a move to 40.17, and that certainly seems feasible. The equity-only put-call ratios are moving lower again, but I'd like to see them move below the June lows in order to give a really solid buy signal. The breadth oscillators are on buy signals. The breadth improved quite a bit last week, enough to push these over to buy signals. And they're not yet overbought, so they do have some room to move on the upside. New highs versus new lows, though, that really hasn't improved. There's just not many new highs, and so that indicator remains negative. So it brings us to volatility. Now, we have the VIX spike peak buy signal. Actually, we got that a couple of weeks ago, and that's still in place. But the trend of VIX, which is the more intermediate term picture, that's still not positive yet for stocks. VIX would have to fall below 24 in order for that to happen. And then finally, the construct of volatility derivatives, meaning the term structure of the VIX futures, is just modestly positive. It's not rousingly positive, just slightly positive. So overall, the longer-term picture is still bearish, but the short-term picture has improved. And it does appear that this short-term oversold rally, which typically rises to above the 20-day moving average by a short distance, and so we're using a target there of 40.17. I invite you to visit our website, take a look at our daily newsletters where we cover all of these things on a up-to-date basis and make recommendations accordingly. Meanwhile, have a great week trading, and I think we're coming up on another 3-day weekend, believe it or not.